Hello students, welcome to today's episode. In today's episode, we will discuss cash flow statement. I am Dr. Arshia Hussain, teaching in the Department of Commerce and Business Studies, Jamia Millia Islamia, New Delhi. A cash flow statement is a statement showing inflows and outflows of cash. That is, sources and application of cash during a particular period of time. Cash flow statement analyzes the reasons for changes in balance of cash in hand and at bank since one date to a next date after a gap. The objective of preparing cash flow statement is to show the movements of cash between the closing dates of two balance sheets. According to Institute of Cost and Works Accountants of India, cash flow statement is a statement settling out the flow of cash under distinct heads of source of funds and their utilization to determine the requirements of cash during the given period and to prepare for its adequate provision. Now we will discuss objectives of cash flow statement. The main objectives of preparing cash flow statement are: first one, determination of cash requirements during the given period. Second point, making adequate provision of cash for the future. Third, judging the ability to meet debt retirement requirements. Fourth point, examining the possibility of maintaining regular dividends. Fifth one, assessing the capability of business to finance cost of replacement and expansion. Sixth point, management of cash flows. Now we will see need for cash flow statement. Cash flow statements are an essential part of financial analysis for three reasons. Number one, to know the liquidity position of an enterprise. Number two, to know the changes in assets, liabilities and equity in the form of cash outflows, cash inflows and cash at hand. Number three, to estimate the future cash flows. Now we will see what are the sources of cash. The important sources of cash are: first one, issue of shares; second, issue of debentures; third, raising loans and deposits; fourth, sale of assets; fifth, cash from operations. Next we will see applications of cash. The important applications of cash are: first one, redemption of preference shares; second, redemption of debentures; number three, repayment of loans and deposits; number four, purchase of assets; number five, payment of tax and dividend. Next is cash towards operations. Now, form of cash flow statement. The cash flow statement can be prepared in any one of the following forms. The first form is statement form and the second one is account form. The first one is statement form. The cash flow statement starts with the opening balance of cash in hand and at bank. The sources of cash are added to it and applications of cash are deducted out of it. Thus, we arrive at the closing balance of cash and at bank. Cash flow statement as per cash basis. A cash flow statement discloses the net increase or decrease in cash during an accounting period. It provides information about the flow of cash into and out of a company. It explains the changes in cash position from one balance sheet date to the next balance sheet date. A cash flow statement examines the effect on cash of different types of cash inflows and outflows. In this process, all cash flows, that is, activities resulting into cash flows, are classified into different categories. First one is operating activities. Second is investing activities. The third one is financial activities. We'll discuss first of all operating activities. Operating activities are those transactions which are considered in the determination of net income. Examples of cash inflows in this category are cash received from debtors for goods and services, interest and dividend received on loans and investment. Examples of cash outflows are cash payments for goods and services, wages, interest, taxes, supplies and others. Next is investing activities. Investing activities include acquisition of long-term or fixed assets, disposal of long-term assets, acquisition and disposal of intangible assets, purchase and sale of shares, debentures and other securities, lending of money and its subsequent collection. Cash inflows from investing activities generally include cash sales of property, plant and equipment and intangible assets, cash sales of investment in shares, debentures and other securities, cash collection from borrowers. Cash outflows include purchase of shares, debentures and securities of other enterprises, purchase of property, plant, equipment and other long-term assets and loans given to other firms. The last one is financing activities. Financing activities relate to long-term liabilities and equity capital. A firm engages in financing activities when it obtains resources from owners, returns resources to owners, borrows resources from creditors, and repays amount borrowed. Cash inflows include proceeds from issue of shares and short-term and long-term borrowings. Cash outflows include repayment of loans and payments to owners, including cash dividends. An important note is cash and relevant terms as per Accounting Standard 3 revised. So, as per AS 3 revised issued by the Accounting Standards Board, first one, cash fund. Cash fund includes cash in hand, demand deposits with banks and cash equivalents. Next is cash equivalents are short-term, highly liquid investments readily convertible into cash and which are subject to insignificant risk of changes in values. Second one is cash flows are inflows and outflows of cash and cash equivalents. The statement of cash flow shows three main categories of cash inflows and cash outflows, namely operating, investing and financing activities. The first one is operating activities. Operating activities are the principal revenue generating activities of the enterprise. Second, investing activities include the acquisition and disposal of long-term assets and other investments not included in cash equivalents. Third one, financing activities are activities that result in change in the size and composition of the owner's capital, including preference share capital in the case of a company and borrowings of the enterprise. As per Accounting Standard 3, the inflow and outflow of cash are investing activities, cash inflow, cash outflow, sale of fixed assets, purchase of fixed assets, sale of investment, purchase of investment, interest received, dividend received, financing activities, cash inflows, cash outflows, issue of shares, cash repayment of amounts borrowed, dividends paid on equity and preference share capital, issue of debentures in cash, interest paid on loans or debentures, proceeds from long-term and short-term borrowings. Now, we will have a look at the format of cash flow statement. This is the cash flow statement as per the direct method for a company XYZ for the year ending 31st December 2019. First of all, we will have cash flow from operating activities. Under cash flow from operating activities, we have cash receipts from sales, interest received, cash payments for purchases, operating expenses, interest payments, income taxes, net cash flow from operating activities. Then we have cash flow from investing activities, which includes sale of plant assets, sale of investments, purchase of plant assets, purchase of investments. Then we have net cash flows used by investing activities. The third one is net flows from financing activities, which includes repayment of bonds and debentures, issue of common shares, dividends paid, net cash flows from financing activities. This will give us net increase or decrease in cash. Now we'll have a look at the cash flow statement as per indirect method for a company XYZ Limited for the year ending 31st December 2019. First of all, we have cash flows from operating activities. Under this, we have net income adjustments to reconcile net income to net cash provided by operating activities, depreciation, gain on sale of plant asset, loss on sale of plant asset, decrease in accounts receivable, increase in inventory, decrease in prepaid expenses, increase in accounts payable, increase in accrued liabilities, decrease in income, taxes payable. Net cash flows from operating activities will be the result of all this. Next is cash flows from investing activities, which include sale of plant assets, sale of investments, purchase of plant asset, purchase of investments, which will give us net cash flows used by investing activities. Next is cash flows from financing activities, which includes repayment of bonds and debentures, issue of common shares, dividends paid, which will give us net cash flows from financing activities. This will result in net increase or decrease in cash. Now we'll see presentation of a cash flow statement. The cash flow statement should report cash flows during the period classified by operating, investing and financing activities. The cash flows from operating, investing and financing activities are presented by a business organization in a way which is most appropriate to its business. Classification by activity provides information that allows users to assess the impact of those activities on the financial position of the enterprise and the amount of its cash and cash equivalents. First one is operating activities. The amount of cash flows arising from operating activities is a key indicator of the extent to which the operations of the enterprise have generated sufficient cash flows to maintain the operating capability of the enterprise. Cash flows from operating activities are primarily derived from the principal revenue producing activities of the enterprise. Therefore, they generally result from the transactions and other events that enter into the determination of net profit or net loss. Examples of cash flows from operating activities are: first one, cash receipts from the sale of goods and rendering of services. Next is cash receipts from royalties, fees, commissions and other revenue. Next is cash payments to suppliers for goods and services. Next is cash payments to and on behalf of employees. Next is cash receipts and cash payments of an insurance enterprise for premiums and claims, annuities and other policy benefits. Next is cash payments or refunds of income taxes unless they can be specifically identified with financing and investing activities. And next is cash receipts and payments relating to future contracts, forward contracts, option contracts and swap contracts when the contracts are held for dealing or trading purposes. Second one is investing activities. After operating activities, we have investing activities, which says the cash flows arising from investment activities represent the extent to which expenditures have been made for resources proposed to generate future income and cash flows. Examples of cash flows arising from investing activities are: first one, cash payments to acquire fixed assets including intangibles. These payments include those relating to capitalized research and development costs and self-constructed fixed assets. Next is cash receipts from disposal of fixed assets, including intangibles. Next is cash payments to acquire shares, warrants or debt instruments of other enterprises, and interest in joint ventures other than payments for those instruments considered to be cash equivalents and those held for dealing or trading purposes. Next is cash receipts from disposal of shares, warrants or debt instruments of other enterprises and interest in joint ventures other than receipts from those instruments considered to be cash equivalents and those held for dealing or trading purposes. Next is cash advances and loans made to third parties other than advances and loans made by a financial enterprise. Next is cash receipts from the repayment of advances and loans made to third parties other than advances and loans of a financial enterprise. Next is cash payments for future contract, forward contract, option contracts and swap contracts except when the contracts are held for dealing or trading purposes or the payments are classified as financing activities. And cash receipts from future contracts, forward contracts, option contracts and swap contracts except when the contracts are held for dealing or trading purposes or the receipts are classified as financing activities. Next is financing activities. The separate disclosure of cash flows arising from financing activities is important because it is useful in estimating claims on future cash flows by providers of funds, both capital and borrowings to the enterprise. Examples of cash flows arising from financing activities are: first one, cash proceeds from issuing shares or other similar instruments. Next is cash proceeds from issuing debentures, loans, notes, bonds and other short or long term borrowings. And the third one is cash repayments of amounts borrowed. Methods of reporting cash flows from operating activities. See, there are two methods by which an enterprise may report cash flows from operating activities. They are: first one, the direct method, and the second one is the indirect method. First of all, we will have a look at the direct method. This method discloses the major classes of gross cash receipts and gross cash payments. Second one, indirect method. In this method, the net profit or loss is adjusted for the effects of transactions of a non-cash nature. Any deferrals or accruals of past or future operating cash receipts or payments and items of income or expense associated with investing or financing cash flows. Now, we will see cash flows from investing and financing activities. An enterprise should report separately major classes of gross cash receipts and gross cash payments arising from investing and financing activities, except to the extent that cash flows described in the following paragraphs are reported on a net basis. Now, reporting cash flows on a net basis. Cash flows arising from the following operating, investing or financing activities may be reported on a net basis. First one, cash receipts and payments on behalf of customers when the cash flows reflect the activities of the customer rather than those of the enterprise. Examples of cash receipts and payments are the acceptance and repayment of demand deposits by a bank, funds held for the customers by an investment enterprise, and rents collected on behalf of and paid over to the owners of the properties. Second one is cash receipts and payments for items in which the turnover is quick, the amounts are large and the maturities are short. Examples of cash receipts and payments referred here are advances made for and the repayments of. Next is principal amounts relating to credit card customers, the purchase and sale of investments and other short term borrowings, for example, those which have a maturity period of 3 months or less. Next is cash flows arising from each of the following activities of a financial enterprise may be reported on a net basis. First one, cash receipts and payments for the acceptance and repayment of deposits with a fixed maturity date. Second one, the placement of deposits with and withdrawal of deposits from other financial enterprises. And third one is cash advances and loans made to the customers and the repayment of those advances and loans. Now we will see extraordinary items. The cash flows associated with extraordinary items should be classified as arising from operating an investment or financing activities as appropriate and separately disclosed. The cash flows associated with extraordinary items are disclosed separately as arising from operating, investing or financing activities in the cash flow statement to enable users to understand their nature and effect on the present and future cash flows of the enterprise. These disclosures are in addition to the separate disclosures of the nature and amount of extraordinary items required by Accounting Standard 5. Net profit or loss for the period, prior period item and changes in accounting policies. Interest and dividends. Cash flows from interest and dividends received and paid should each be disclosed separately. Cash flows arising from interest paid and interest and dividends received in the case of a financial enterprise should be classified as cash flows arising from operating activities. In the case of other enterprises, cash flows arising from interest paid should be classified as cash flows from financing activities, while interest and dividends received should be classified as cash flows from investing activities. Dividends paid should be classified as cash flows from financing activities. The total amount of interest paid during the period is disclosed in the cash flow statement. Whether it has been recognized as an expense in the statement of profit and loss or capitalized in accordance with Accounting Standard 10. Now we will see format of cash flow statement as per the direct method. So, this cash flow statement is for a company XYZ Limited for the year ending 31st December. First of all, we have cash flow from operating activities, where we have cash receipts from sales, interest received, cash payments for purchases, operating expenses, interest payments, income taxes, which gives us net cash flow from operating activities. Next is cash flow from investing activities, under which we have sale of plant assets, sale of investments, purchase of plant assets, purchase of investments. This gives us net cash flows used by investing activities. Next is net flows from financing activities, which includes repayment of bonds and debentures, issue of common shares, dividends paid, will result in net cash flows from financing activities. Thus, we have net increase or decrease in cash. The cash flow statement is by way of indirect method. For a company XYZ Limited for the year ending 31st December, we can see here in the format, first item given to us is cash flows from operating activities, under which we have net income adjustments to reconcile net income to net cash provided by operating activities. Then we have depreciation, then gain on sale of plant asset, then we have loss on sale of plant asset, then we have decrease in accounts receivable, increase in inventory, decrease in prepaid expenses, increase in accounts payable, increase in accrued liabilities, decrease in income tax payable. For this, we have net cash flows from the operating activities. Next is cash flows from investing activities, which includes sale of plant assets, sale of investments, purchase of plant assets, purchase of investments. Then we have net cash flows used by investing activities. Then cash flows from financing activities, for which we have repayment of bonds and debentures, issue of common shares, dividends paid. Then we have net cash flows from financing activities. This will all gives us either net increase or decrease in cash. So, students, now we will see one illustration on cash flow statement. Following are the balance sheets of a Kaushalya Limited. You are given with the balance sheet. Under the balance sheet, you have liabilities on one side and assets on the other side. Under liabilities, we have creditors, loan from partners, then loan from bank, and then capital. We are given liabilities for two different periods. For the year 1st January 2017, which is the beginning of the year, at the end of the year, which is 31st December 2017. Different figures are given for the liabilities. Then we have assets for 1st January 2017 and then for 31st December 2017. We are given cash for the year 1st January 2017, which is the beginning of the year, is 4,000. Then at the end of the year, it is 3,600. Then we have debtors, which is 35,000 in the beginning of the year and then 38,400 at the end of the year. Then we have a stock. In the beginning of the year, it is 25,000. Then at the end of the year, it is 22,000. Next, we have land. In the beginning of the year, it is 20,000. Then at the end of the year, it is 30,000. Next, we are given with buildings. In the beginning of the year, it is 50,000. At the end of the year, it is 55,000. Then we are given with machinery. In the end of the year, it is 80,000 and then at the end of the year, it is 86,000. So, the total of all both the sides for the liabilities and the assets is 2,14,000 for the beginning of the year and then 2,35,000 at the end of the year. For the assets also, in the beginning of the year, it is 2,17,000, which is the total, and 2,35,000 is the total for the end of the year. We are given with some adjustments. During the year, rupees 26,000 paid as dividend. The provision made for depreciation against machinery as on 1st January 2017 was rupees 27,000 and on 31st December 2017 is rupees 36,000. Now, we will have to prepare a cash flow statement. As you can see the solution, it is given with the machinery account. In the machinery account, we have opening balance 80,000. Then we will write provision for depreciation, which is 27,000. Then we have bank, which is basically the purchase, that is 15,000. On the credit side, we have provision for depreciation 36,000. Then the closing balance is 86,000. The total of both the sides is 1,22,000. Okay, we can see the cash flow statement for the year ending 31st December 2017. First of all, we are given cash flow from operating activities, which is net profit before tax, which is 27,000. Then we have adjustment for depreciation 9,000, increase in current liabilities is 36,000, increase in debtors is 5,000, decrease in stock is rupees 3,400, that is minus 3,400. Thus, net cash from operating activities is equal to 40,600. Second is cash flow from investing activities. Under this, we are given with purchase of land, which is minus 10,000, purchase of building minus 5,000, purchase of machinery minus 15,000. So, net cash from investment activities is minus 30,000. Then we have cash flow from financing activities, which includes loan of rupees 20,000, then repayment of bank loan minus 5,000, then payment of dividends minus 26,000. So, thus net cash from financing activities is equal to rupees minus 11,000. Now, net cash flow from all the activities, that is A plus B plus C, that means operating activities plus investment activities plus financing activities is equal to minus 400. We will add opening cash balance in this, which is 4000. Then finally, we have closing cash balance, which is 3600. So, that is all for today. Hope you have understood today's topic, that is cash flow statement. So, we will meet with a new topic in the next episode. Till then,